Good morning, good morning. It's Monday. Hope you guys had a good weekend. We started from the beginning of price action here in the 80s, working our way forward, all the way through to here. And in the grand scheme of things, the 80s on the daily chart was right here, right before the big drop on the monthly, as you can see. Right here. Big drop on the monthly. Where's my pen? Why did my pen disappear? It's so weird. It was there 2 minutes ago. Let's wait for it to load up. Thank you. Here's the big drop. Here's basically what we were working on the daily chart. This was the overall picture that was being displayed here. Okay. So we had a 6-month supply that came into play after price dropped significantly. 6-month supply was created. Right, let's double check. Right there, yes, 6-month supply. And then it came up and tested that supply right up here. Then 6-month supply came into play, big push to the downside. And then we got the removal of that. And then it looks like one last supply here. And that is going to be right here, this portion of the chart that we're doing now. So let's just enlarge that. There's a supply here. Right there. Okay. So if we were to let's just, what we can do is this. We can take a rectangle, do that. And we can color it like this, apply, and we can, there. And we can, just for today's session, we can do that. See, there you go, monthly supply. And then today, as we do the session, we will recognize that this was a monthly supply zone. Look how it broke through the lows, and then price rallied up to continue downwards. Okay, why is this so important? Well, because we want to know what structures look like as they respond to the higher time frame zones. Right, so if we open this up again, because context is everything in this world of trading. Context is everything. So we can see when we look at the chart, look, price had never been down here before. See? Price was never down here before. This is all-time low scenarios. This is the lowest price had ever been, right here. And supply was created right here. Once it pushed price into the uncharted territories, because who's going to push price into uncharted territories? It's not retail traders with proportional candles. It's going to be the banks, the big institutions. So that is their supply. Comes up, contacts supply, and then away she goes to the downside. Okay, so let's just remember with today's class, this is what price was doing. Inching towards new lows and then reversing back up. Okay, so now we'll be able to understand when we look at price action when we look at the trends that are being created or the lack of trends or the momentum shifts, we'll understand and put things into proper context. So that's the part of the chart that we're dealing with today. All right, where did we finish off? Right there. Ranging, price was ranging, all this was ranging. All this stuff. Why? Again, because of the context that we were dealing with. Where was price? Yeah. Okay. Let's see. Better shot. Up into supply. Yeah, just down here at those lows. Yeah. Okay. Yeah, all throughout here. Yeah. Okay. All right, so let's move forward. Okay, so what do we got? We got price moving to the upside, removing some supply here, creating a demand right here. And where is it? There you go. And then creating some supply here. Okay. Let's just send that to the back. Okay, so remember, monthly supply is being created here, okay? If the higher time frames don't have anything going on, if price is just sitting, you know, and there's no forces in play to actually drive price, there's no trends in play to actually drive price, there's no breakouts of ranges to actually drive the momentum of price, then on the lower time frames you have to recognize that, because you could have descending structures being formed within those periods of time, but they're meaningless. Okay, so I want you to show me. So with this being said, I'm going to give you drawing capabilities. I want you to show me on the chart, since we are dealing with the daily chart, when do you think it would be important to start paying attention to the structures being built on the chart? Starting from when? Barris, I can't give you drawing capabilities. Maybe you're on your phone. Tran, how's it going? Okay. At what point do you think it would be important to start paying attention to structures on the chart? I'll give you a minute. All right, 2 people are making marks. There's a ton of you in class today. Click on your pens and make the mark on the chart. Please and thank you. Primus, okay, I see your mark. Lance, I see yours. Justin's, I don't see Justin's. Are you there, Justin? Do you have your pen? Oh, okay. All right. All right. Well, basically, you're all doing this area, okay? So supply is created on the monthly chart. As it breaks price to the downside, retraces and contacts supply here. Now we know that we have a force to the downside. We know the direction of that force. We know the time frame of that force. Okay. And so now we know what structures we can be looking for. So starting from here, when this monthly supply gets contacted, now we can start looking for the structures here and for signs of how to engage in this. Okay? Up until then, it's like anything goes. Like when it's creating a supply, like you could see what happens here, right? Let's follow along. Okay. All right. So yeah, this is probably like that. Let's see what was contacting up here. It was just removing supply. And here, yeah, it wasn't really contacting any supply to drop it. So we got to be careful with that switch zone. Okay. All right. So we'll take a look at this. Okay. I have a trend line drawn to the downside here. Okay. So this is not good. Okay. Let's take a closer look at this. Now, here's the problem. Look at that. Okay. There is no newer high here. There's a rally. Now, you could look at this one here as a base. Okay. That's fine. But let's look at the lower portion here. Okay. If you were to label that as a base, okay, but this does not surpass this here, this high. Okay, this would have to go up, and then the lack of space here, the chart's telling you something else is going on here, right? So this is not valid. Invalid, which means this is not supply because it didn't remove anything. Didn't break a trend line and it didn't remove an opposing zone. So that's out. Okay. And why is this happening here? Well, we just looked at what happened. Because there is a supply here. It removed it, creating demand down here. Or somewhere here, you know what I'm talking about. And it was just running out of steam in order to drop. Okay. That's what was happening here. Okay. That's why there's improper trend line formations and all that stuff. All right, so price starts heading downwards. It removes this demand, okay. And that trend line looks okay. Removes that demand, creating supply. Brings rallies up to supply. All right. Now look at all this here. Okay, no descending trend line throughout here. Nothing. Price comes up. All right, so now we have this and we have this. Okay. Multiple basing candles down here at the lows, multiple basing candles down up here at the highs. So we have a trend line going through like this, okay? And then we have another one going through like this. Now, we have 1 and we have trend line 2. Which one do you think is more important? You can type it in your question box. Trend line 1 or trend line 2? Which one's more important? There's a lot of things that we've come to learn over the last, even this class. This class, when did we start this class? A lot of things we've come to learn. We started this class, let me see, I don't recall the date off the top of my head. Level 2, October 3rd, October, November, December, nice. So in about 2 months and a bit, we've learned a lot. And one of the things that we learned about is when we have a trend line, the market has taught us a lot, right? The market has taught us a lot. It's not what I think. What I think is not important. It's what the market is telling me and whether or not I'm recording that information. So what I have learned personally is that if we have a structure, okay, where you have 1, maybe 2 basing candles, 1 candle here, big long candle here for momentum, that's a great trend line. That's a great trend line. What the market is telling me is this structure to the downside is something that we're focusing on right now based on this time frame. Meaning if you're looking at a daily chart, there's going to be multiple daily candles here, a couple daily candles here, sometimes just 1 daily candle there, but it could be 2, 3, right? A couple, maybe 3 daily candles here, a few daily candles here, and then the rest daily candles here. So if we're dealing with the daily chart and that's what the chart is presenting us, then that means this overall structure that's being presented here is important. It's valid, it's recent, it's based on the time frame that we are examining, and it's something that we should be paying attention to. This is what the market has told us. If it's properly structured, it looks the way it's supposed to, the basing candles are there, properly separated from the lows and the highs, separated with proper momentum candles, the market is telling us, pay attention, okay? So that's scenario number 1. Scenario number 2 is when you have highs, and we have a trend line that stems from further back. Well, let me see here. No. That's a bad example. Let me redo it. Okay, this is a better example. All right. So when you have a structure like this, okay, And within these areas, you have multiple basing candles, multiple basing candles, multiple basing candles, lots of long candles or momentum candles, lots of momentum candles. Momentum candles, but they just don't quite close above the wicks of the basing candles. And it just seems like a lot of stuff is happening. Okay. It just seems like a lot of stuff is happening in between these areas. Right? In the first example, it's so simple, so obvious, so in tune with the time frame, meaning the structure we're looking for is created within that time frame. But the structure we're looking for is like, a couple, maybe a few candles as the basing, a few candles as the drop, one or two or three candles as the basing, one or two momentum candles to the upside, one or two or maybe three candles of the basing at the highs. Okay? This is what we're looking for so that we know that structure actually exists on that time frame. When we see this type of stuff happening, where there's like a lot of candles creating the drop, many basing candles and slight moves up and further basing, but that further basing doesn't close, or the momentum up to separate the lower basing from the higher basing doesn't exactly close above the wick of the previous basing, so there actually isn't momentum to separate it. But you see these type of structures in these areas here, then you start to think to yourself, well, wait a minute, is this being created on this time frame? Is this what typically happens when these structures are being created on this time frame? The answer is no. And we should be watchful of that, because when you realize that for structures to be built on a weekly chart, they require 6 candles on the daily, Monday, Tuesday, Wednesday, Thursday, Friday, depending on, if you're looking at currencies or stock market, 5 candles. So when you see multiple candles being created at a base, or 10, 15 candles creating the rallies, you have to start to ask yourself, is what's really happening on a higher time frame? Okay? Because if it is, then it could mean that the significance on this time frame becomes less. So let's go back to this picture here. So when I'm examining this, I'm looking at all these candles here. I'm looking at all these candles here. You see, drop, base, rally. Was the banks trying to create a drop base, rally base? No, they weren't. Okay? All of this is part of a move. Well, if it's part of a move, what time frame is that move being created on? Aha, now you're asking the right questions. If what is being created is to facilitate a move on a higher time frame, then you have to understand that this whole move is about another time frame. It's not about this time frame. So if this whole move is about another time frame, then what would be the logic to include these highs as 0.1 and here as 0.2? What would be the logic behind that? Would it be strong? Would the logic be very strong? It would be not very logical. I mean, you could do it, and we have done it. This would be considered a primary trend line, and many times they come into play, but you have to understand the proper context when they do come into play, right? But what we have learned about the markets is what we want to be focused on is the price action that pertains to this actual time frame. And we can tell that by when there's minimal candles being created to form the drop, minimal candles being created to form the base, minimal candles being formed as the momentum rally, minimal basing, and minimal drop. Proper dimensions and proportions of the space away from the trend lines, and so forth. When we see that, we know this formation is being created on this chart. So for me, when I'm glancing at this chart and I see this trend line here, and I see this trend line here, the one that's more important and the one that's going to give me more accuracy is the second one, not the long one, but the second one. This is the one that's going to be more important to me. All right. So let's make a note here and the reasons why. Okay. And left. There we go. Okay. That's what the market has taught me. So when the market teaches me something, I listen. I'm not going to argue with it. I just will listen and say, okay. And then think through it. I'm not just going to accept it and say, all right, I'm going to accept everything you tell me blindly. No, I'm going to think through it. Why would that market be telling me that lesson? Why is it telling me that? Why is it showing me that? Why is this trend line coming through what I know to be true here, through these candles like that? Why would that happen? Yes, there wasn't a momentum candle up here. I get that. But look at where this one is coming at. Look at where it creates this zone. Look at where price action comes, and look at where the bodies of the candles are, right at that trend line. Why is the market showing me this? The market's showing me this because it's important. And I have eyes to see it because this is what I do. This is what I study. I'm aware of things like this. I know that the market is talking to me. I know the value of this type of information. I know it because it's these little details that have created my understanding of the markets. And I have been rewarded for paying attention to these small details and becoming aware of this knowledge that the market is trying to present to me. So then I have to make logical sense of why. Because it is in the understanding of the logic that gives me more awareness of the market. It gives me knowledge nobody could ever give to me. And that's why this portion shouldn't be considered as important as what's happening here. Make sense? I get one yes, two yeses. Room full of lots of people. Come on, peeps. There you go. Now we're getting more. Beautiful. All right. Yeah, makes complete logical sense to me. So that's how it is, and that's how it's going to be. So we got to be very careful with these longer trend lines. Sometimes they play a role, sometimes they don't. It's our job to understand the difference between those times that they do and those times that they don't. And within this context, remember what we were saying about the structure. Supply was being formed here. So contacts now is the important structures. Okay, now is the important structures and trends that we should be looking for. Okay, so all right, so price is heading lower. Here we go. And let's see. This is all-time lows. So this would be, oh, look at that. Was there price action down here? No. This goes a little bit higher. Little bit right there. Anthony writes, wouldn't this trend line be very close to the same as on the weekly and hold more value? Yeah. Well, I don't know if it would be on the weekly. It probably not. Let's go take a look. Probably not. Let's see. Bum, 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 bum. So it would be, this is the spot that we're looking at. Okay. Drop base, rally base. Yeah, I think technically it's there, but what does the chart tell you? Yes or no? Should that trend line be drawn in? What does the chart tell you? What do you think? What's your intuition just by what you're looking at? See, I could already see it on the daily chart that it was highly unlikely that there was going to be a trend line there. I could already see it, but what does the chart tell you? Do you think? Michael says no. Justin says no. Lance, not proper candle structures breaking the trend line. Yeah, exactly. Okay, so there isn't. Yes, technically there's a drop, technically there's a base, technically there's a rally, technically there's a base, technically there's a new low, but just don't say, oh, technically it's there, so do it. No, use your mind, use your brain, use your eyes. Let the market talk to you. Don't just do because it's technically there, right? We're beyond that stage now. Okay, so technically there, but the market says no. Why? Look, no basing here, okay, because it's crossing through there. So then that means we'd have to go below, right? Is that basing? What have we learned about that type of price action? It's usually not associated with demand coming into play, but a reaction to demand previous, okay? Look at the move away here. Look at the distance. Look at the lack of it here, okay? So all those things are saying no. So that's why I'm telling you, just by looking at the daily chart, it was very highly unlikely that it was going to be a trend line there. Okay? And when you understand why isn't there a trend line there? Because that's what you should be asking. Why? But why? Why was that formation being formed like that, but it wasn't actually a trend line? Why? Because this here, this rally base drop, it was creating supply. They were creating supply. They were filling in short positions to drive price to all-time lows. They weren't focusing on creating a trend to the downside. That's not what their focus was. Their focus was creating supply here, dropping price down to rally it back up to contact supply to drive price lower. That's what they're focused on. That's what their focus was on, not this. And this is why it's so important to recognize these little minute details, right? It's like one of the reasons why I'm reading this book. Okay? One of the reasons why I'm reading this book, Trading with Intermarket Analysis, is because, you know, one of the importance the importance of reading books like this and understanding how the markets are correlated with each other is extremely important. Not because, the way that this book presents the information is like, well, if you're a commodities trader, you want to be tracking the dollar because typically the dollar will start to, or commodities will start to make a move before the dollar does. So if you see commodities starting to make a move first, then the dollar is probably going to follow suit. Okay, that's great, right? But we have a lot more tools in our arsenal in order to track price. We have a lot more tools. We have the CFTC positions, so we know what to expect from the positions or from price action based on what the positions are doing. And we have supply and demand. We understand when they're creating demand, creating supply, that when price enters into these areas, depending on the context, that we're supposed to, we are to anticipate certain moves taking place in the markets. But there's times in the markets that we look at the charts and it's not very clear what that chart's going to do. Like we see the dollar removing monthly demand, and it leads us to suspect, wait a minute, if it's removing monthly demand, then that means maybe price is going to head lower, right? Okay. But we're able to look at other charts and see their dynamics. We're able to look at other assets and see the positions that are in play. And if they are clearer, if they're presenting a clearer picture of what is about to play out, then we can correlate whatever market with that and be able to determine where those markets are going to go, the ones that have the charts that are difficult to read. So one of the things that also helps us to understand what is happening on the chart is knowing when there is a lack of a trend line, when there's an improper trend line. Why? Why? When there's too many candles forming a descending trend, why? This understanding of why gives us the answers of what's going on. Because if we know there's an improper structure being created on the weekly chart, then that tells us something else is happening. So this is all-time low. This is all-time low. Remember, when you're trading the live market, the answers aren't given to you, right? The answers are given to us now because we can see what happened. So it can make it easy. It gives you this false sense of confidence of understanding the markets because you already see how it plays out. But in a live market, you don't see how it plays out. You have to figure that out. And the only way you're going to figure that out is to look at price and understand, how is it that I could have known what was happening in this circumstance? What telltale signs were there staring right at me to tell me, no, you shouldn't be focusing on this chart? Okay. So when we come to the weekly chart, look, there was a supply here. This supply was breaking price to new lows. Right here. Price breaks to new lows. Let me get that right here. All-time lows. Where are you? There you go. Thank you. Okay. Those are all-time lows. Let's play it forward. Boom, 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 bum, bum, bum. Rallies up. Boom. There we go. All-time lows, right? So we're looking at this and we're like, all right, I want to engage in this because it just broke to all-time lows. I want to engage in this market. And so we have a trend line to the downside and we have supply being created. Maybe this is the time for me to engage, right? So if you're just so, giddy about the fact that you have a downward trend and a downward trend line, and all you're thinking about is getting in short because now we have a structure to the downside, and you're thinking, if price gets up here, I'm going to short this sucker. If you're too busy thinking about that, then you're not thinking critically about what you're seeing. You have to refrain from being giddy, and you have to think critically about what you're seeing. You have to be able to look at the information, and despite what the news is telling you, what anybody is telling you, just trust in your ability to read the data. The market is your best friend. It's not working against you. The market is your best friend. It's giving you, it's trying to communicate in its own language to you because it wants you to make money. The market wants you to make money, so you've got to listen. So this is why you study it. So you're looking at this and you're like, okay, I'm listening to you, I'm listening to you, I'm listening to you. The market's like, okay, pay attention. Do you see this curve here? And you're supposed to say, yes, I do. Okay, pay attention to this curve here, because what have I shown you about this curve? Well, for there to be a proper trend, this structure should be replicated after point 2. So is this point 2 here? It kind of looked like it, but then you gave me this little hump. Yeah. Do you like that little hump? No, I don't. Why don't you like it? Well, because it's not giving me the same dimensions of what previously existed here. Aha. Well spotted. Okay, what else do you see? Well, I see a big move to the downside. So what would you be expecting at this point? Good question. Because if this continues down here, like this, and you wanted to see this same structure, visually, right? Visually, this is what you're seeing in your mind, right? So you tell yourself, okay, this is what I'd like to see. This is what the market's telling me would be appropriate. Okay. But if you see that, if that would be required to create a proper descending structure, by the time price is down here, where's the supply? Right? Look at the distance between where price would be to make this a valid trend line and where the supply would be that was used to create new lows. So what are you thinking at this point? You're like, well, you know what's going to have to be created? A base here to take price to new lows. Why? Well, because then this would be new supply. And, if price came up here and touched this supply around here, that would be valid. That would look good. So all this, you have to see it. You have to visualize this in your mind before it's even created. And this is how now the market's like, thank you. You're listening to me. You've taken everything I've communicated to you, and now you know. Now you know what to expect from me, right? If you had expectations of somebody and they didn't fulfill those expectations, and somebody came up to you and said, do you expect them to show up today? If you had an engagement and you expected them to you expected somebody to wake up at a certain time, to get ready at a certain time, to leave the house at a certain time, so that they can get to that engagement at a certain time, and that person did not wake up at a certain time, so they weren't getting ready as they were supposed to be getting ready, and there was no way they were going to leave home on time, would your expectations be that they're going to show up and fulfill the expectations that you had of them? No. No. So, because you're paying attention to what would be required for your expectations to be fulfilled. Okay? So this is how you have to look at the market. You can't just be like, oh, it's a weekly downtrend and it took out the previous lows and there's a supply there. So I'll just wait until price, consolidates and heads up into that supply, and then I'm going to short the market. Because if you do that, when things haven't been thought through, you're going to lose money. Okay, take this from my experiences. Because every time I've thought that way and I didn't do the proper critical thinking, I more often than not lost money. Sometimes they worked out, but more often than not, I lost money. And then when I stop and look back and say, what could have I noticed or done differently to avoid it? And it all comes down to being able to be a critical thinker, to look at the data and take what you know to be true and study it. Okay? So this is what the expectations would be. So now we play out what ends up happening. Creates a base. Okay. Beautiful. Oh, rallying back. Oh, look at that. Look at that. You see how it created a base and all of a sudden, did it create a momentum candle to the downside after that base? Remember how we said for this to have been better, we would have needed a basing candle and then a momentum move to the downside to create supply. So that supply would be in proper proportional dimensions with the descending trend line. Remember we said that? Just from talking it through. Now it created a momentum move to the upside. So did it just erase any possibility for supply to be created at that basing candle? Yeah, it did. Interesting. I wonder why. Well, you know why. You should start to know why, right? It created a momentum candle to the upside. What do we know to be true? When price creates supply, drops with momentum, bases at the lows, and then creates a momentum to the upside. What do we know to be true? Bullish engulf. Within the context, let's just close that. Within the context of supply being created, what do we know to be true? When a bullish engulf is created, it typically means price will rally up to the opposing supply. So would we want price to be rallying up to the opposing supply at this point with these dimensions of this trend line? The answer is no. So then if it does, is it a high quality structure to the downside? No. Would you want to take a short off of that? No. So let's play it forward and see what happens. Now it rallies up, creates a bullish engulf, right? And then it puts a candle to the downside. Now a candle to the upside, just falling short of hitting supply. And now contacting supply. Okay, here we go. Okay? So look at the structure, what we were talking about. How it moved down, came back up, created point number 2. Okay, everybody can see my crosshairs? When I'm showing you guys this and I'm moving my mouse around, you guys can see my crosshairs, right? Like it sticks out very well? Or do you guys lose? Yeah, easy? Okay, all right. So that's point 2. Look at the structure that was created after that. Improper, okay. So isn't this telling you that this structure is weak? Yes, it's telling you the structure is weak. So if it's weak, then that means maybe something is happening on another time frame, right? Exactly. All right. So that is how we would know what to be paying attention to, when to be paying attention to structures, and what to expect from price in the future is because of paying attention to details like this. So we play it forward, it contacts supply, and then look at that. Are we going to get one candle? This is not a good sign. When price has contacted that supply and a candle has closed outside of the descending trend line, you see we have a descending trend line, we would like price action to stay holding on to that trend line and moving below the trend line for it to be evident to us that supply is in play and that structure is in play and the trend is going to continue to the downside. Once it breaks through on the other side of that trend line, this is not a good sign. Okay? But if we didn't take a trade because we noticed all this structure lacking, we would be laughing at this point because we'd be like, haha, you didn't catch me. You know, that's a very momentous moment And I have those moments all the time where I'm looking at price action and I'm like, yeah, it kind of looks like it wants to do that, but the structure is no good. The quality of the zone, no good. So I'm not taking a trade. But then I sit back and I watch and I'm like, let's see what happens. And when it fails to work out, I'm extremely happy because the market said, listen, listen, trust me, don't do it. Okay. I'm giving you the hint. The answer is don't do it. And you're like, okay. And you don't, and then you see exactly why you shouldn't have done it. And it's a great feeling. All right, so now let's move this forward through. There you go, breaks the trend line. What's happening? Something else is happening. Supply is being created on a monthly time frame, and now that monthly supply. So now you're looking at it and you're like, oh, wait a minute, wait a minute, wait a minute. I see what's going on here. This whole time, monthly supply was being formed here. Aha! Now you see. Now you see. Oh, look, price action comes up, contacts that monthly supply. Whoa! What a big move. What would provide two big momentum candles to the downside on the weekly chart? What would be so strong as to provide something like that? Contact of supply on a higher time frame. Beautiful. So this is how you decode and start to figure out what's going on these charts. Yeah, we can exit that. So that is what's in play on the weekly. Here we go. So this is where we are in the daily. So this rally up, what was it all about? A move to get us up to monthly supply. And then level 3 students will be like, aha, I see what you're getting at now, Kev. What have I said in level 3? What have we learned multiple times? When a monthly supply is contacted, especially when momentum is in the direction of that supply, what kind of structure could we be looking for a signal to short? Anybody want to toss it out there? What kind of structure should we be looking for and on what time frame? Momentum shift on the daily. Okay. Momentum shift on the daily. Okay. So you see the lack of proper proportions of a weekly move to the downside, which tells you something else is happening. Yeah, monthly supply. And you might have come to realize this too late. That's okay. That's okay. In time, you'll catch things faster and faster and faster and sooner and sooner and sooner. That's what you'll notice. At first, you'll be like, oh, I caught that too late. Okay, that's fine. You saw it too late. But as time goes by, you'll catch them faster. So this structure gets created to the upside. Okay, look at it. Nice, basing, drop, basing, rally, takes it out, trend line. Basing happening before the trend line, boom! Big, strong momentum candle to the downside. You think that was an important move, breaking right through that trend line? I think so. Basing candle on the opposing side of the trend line, beautiful. Why is that happening? Monthly supply is being contacted. Okay? Monthly supply is being contacted. Daily momentum shift to the downside. Breaks through of that ascending trend line. Retraces up. There's your short signal right there. That's your entry. How many people would like to get in short here and ride the wave of that? You know, do the math. How many risk return you get on a move like that? You know, this is what investors and traders only dream of. Investors are primarily investors because they really can't time the market at all in no way, shape, or form. So they're like, I'll just buy and hold for the long term because I have analysis that is telling me oil is going to go higher over the next 5 years. So I'll just buy oil now. And if it goes lower for the next year, I'm okay with that because I'm going to hold this for, excuse me, for the longer period of time. Then you have your day traders, and they get in and out so quickly because they have no clue where price is going to go, but they're looking at price action on a lower time frame. And they're like, oh, every time there's bullish engulfs, there's typically more movement, so I'll enter into long positions. So that's what they do. Swing traders it's very difficult to be a swing trader because you really have to be able to catch momentum for a certain period of time. Okay. But usually swing traders are day traders who got into bad trades who now are going to hold them a little bit longer because they're hoping to God that price is going to reverse in their direction. You know, what we do here is very special because the accuracy of timing your entries and then having explosive moves in your favor immediately after entering into your positions. I mean, there's nothing like it. What we do here, there is nothing like it that can compare to it. Not one thing. Okay. And this is a perfect example. Like I said, you don't have to take my word for it. You will see it time and time again, over and over again in the markets. And I can safely put these things out there over and over again. I can make these, you know, these statements, these proclamations about the market with 1,000% confidence that I won't be made to look like a fool because there's things I know to be true. And when I know them to be true, will share them because I know it's just a matter of time that you're going to see it too. So, it's a wonderful thing. So when I say daily momentum shifts off monthly supply areas, especially when momentum is in your favor, and then we have a circumstance where monthly supply is there, momentum is in your favor. Why? Because it just broke to all-time lows. Monthly supply is in play. What do I say? Daily momentum shift. And lo and behold, look what we have. Okay? It's exactly what I have learned about the markets. Look at that. Entering in here for a few days, price is sitting at your entry, and then look at this. Boom. Primus, I have seen the same play out on the Dixie chart. Yeah. Yeah. On all charts. Currency charts, gold, oil. Now the stock market, man, is a different beast. I've told you, stocks are a different beast. There's a whole new set of lessons that have to be learned about the stock market. It's a different beast. The market has talked to me and said, you see, it may work for the US dollar, Japanese yen, the euro US dollar, pound US dollar, Kiwi, all those other currency charts, but it's not working here. Okay, so pay attention, Kevin. You were waiting for those things, but this is a whole different beast. We play differently. So you want to trade me, you want to make money from me, pay attention. You've done well. We've paid you for your expertise and your work that you've done up till now in 2022. You got rewarded for your hard work. But let 2023 be the year of learning lessons about the stock market. Pay attention. I've shown you a lot of things, but pay attention. Get out your journal, start journaling what I'm showing you. And so that's what I'm doing. Because there's a lot to learn. And trust me, when I learn it, I will take full advantage of it. Okay, so so it's a beautiful thing. That's your signal right there to get in short. Okay. Okay. Very clear. Now, look at this structure. Boom, big move. Are you surprised? No, monthly supply is in play. So it's creating a movement out of that. So monthly candles are going to be created. How many daily candles are within a month? Well, okay. 5, 10, 15, 20, minimum 20. So because it's creating a momentum out of monthly supply, you're going to have big moves. So would you want to connect the trend line from starting from up here? Would that be a good idea? I mean, if it was properly structured, if it was here, you know, and up, then I would. I would. And that would be the beginning of a trend to the downside in the daily chart. But this here, no, I wouldn't want to. Oops. So, invalid, my friend. Invalid. Look at the drop. We're like crazy. But like not crazy. Not crazy at all. In fact, completely reasonable, understandable, and expected. Look, supply and play. Look at these two candles away from supply. You know the next move is going to be that and multiples of that. Okay? Base and candle, contact supply. So look, this is what's being formed here on the monthly candle. So what is that going to look like on the daily? Well, you see it. Look at that. Look how far. Didn't take much. And in level 3, what we're studying, guys, those of you that are in level 2, and you're wondering like, holy smokes, you know, there's smoke coming out of your ears and you're like, this is crazy. This is just crazy. This is a lot to contemplate leading up to Christmas. Yeah, it's a nice Christmas presents that the government, that the charts are giving us right now. Okay, nice Christmas presents. What we're studying in level 3 are things to do with what structures are formed within momentum candles on certain time frames. What structures are formed? How would we know that? So it's like you're looking at the live market and you see monthly supply is in play. You miss the momentum shift. It's already contacted supply and it's starting to drop. How do you enter into this trade? Where do you put your stop loss? Based on what structures you know are likely to be formed off of that monthly supply being contacted. So you see the drop? That's why it's extremely dangerous to trade the range game. Oh, I'm just going to trade the range game. This book told me, you know, wait until price is ranging. And then when it goes up on the highs of the range, you short it. When it goes down on the lows of the range, you go long. Yeah, until this happens. Then what? Blow up your money. You don't think, look, man, if I designed the markets this way to favor me and my positions, and I knew how the markets moved and what it looked like on multiple time frames based on the movements that I create in the markets, and if I wanted to sucker people in to do the wrong thing at the wrong time constantly, I would write a book about the art of the range breaking. And I would only take those examples where it worked, and I would put those pictures in the book, and I'd be like, here's Tommy. He's 25 years old. He used to live with his mom and dad in the basement. He used to play video games, and then one day he found trading, and then he bought this book, Trading Ranges Like a Master. And then he just traded ranges. It's so simple. Like, you don't even have to think. When it was at the highs of the range, he showed it. When it was at the lows of the range, he went long. It was beautiful, so simple. He just did this over and over again. Now he's a millionaire. Now he's driving around in his vehicle. Look at him. He's got a Lambo. Now he's got girls popping champagne, right? You see it everywhere, time and time again. It's always the same nonsense. So, but they never talk about how it's so easy to make it seem like that, but they don't talk about what happens when the guy goes long here and it fails to go up. And you're like, well, it's still in the range. I'll just add to it, right? And then it'll go up. It's like, it's just overdone. This move to the downside is overdone, and then it's here. And you're like, okay, I'm really down in my account right now. It's got to come back. And then you start using all your Fibonacci retracements, all the other stuff that are in the other books written by me or people that I pay to write. I give them the information, they write it, and then I give them the uh, the publishing, and they write the books and they say, oh, Fibonacci, the Fibonacci master. Meet Mike Maxwell, the Fibonacci master. He turned $2,000 into $13,000 in 3 weeks. And all that nonsense, right? And then you're like, yeah, you know, he's a master of Fibonacci. So let me just do like a Fibonacci retracement thing here and put out the lines. Yeah, we're reaching the 33. It should bounce back. And then I'll read a book about risk management. You know, if I add more at low prices, then when price eventually goes higher, I'll be able to exit my position. You conveniently throw in whatever you want to satisfy your need for being right. And then, you know, by the time you're down here, you've blown up your account. But they never, ever tell you that in the books. But this is the truth. And this is what happens over and over and over and over again. Why? Because they have no clue what's happening in the markets. So instead of playing that game and losing, you could be playing our game, shorting here, waiting for the move to drop, right? And knowing what structures you should look for. So you know when there's a daily supply zone that gets removed, that would be your signal to exit your short. How would you like to get in short here and exit your short here? People are like, you can't do that. That's the time in the markets is impossible. Yeah, for you, because you read the nonsense books that are out there. Not for us. Right, ladies and gents? Can I get an amen up in here? Can I get an amen? Yeah. So, work of art. You see that? Lovely. You know why I get such a kick figuring out this stuff? Because I know nobody else knows it but me. That's why I get such a kick. Because I know I'm not being fooled while other people's are being fooled. I get such a kick of that. I'm like, everybody else is being fooled, but not me. Not that I want other people to be fooled, because I don't. I don't want other people to be fooled. But I know I'm not being fooled. And that means something to me. That's important to me. Okay. Here are, oh, back here. Sorry. Wrong spot. Right here. Look at that. Ooh-wee. Ooh-wee. Big moves. Big moves. Okay, so let's continue. About the trend lines, the move, all that stuff. Okay, we're running out of time, and I do want to get a chance to look at the markets and review it with you guys. So we're talking about the trend line being invalid. No good. Okay, so what happens here? Look at that. Supply being created, emotional wick. Ooh, I wonder what created that emotional wick. Something happened. Some news event, right? That did what? That told everybody they should be buying. Yeah, of course. While we are inside a supply area. Yeah, of course. Interesting, right? And so you remove that emotional wick, guess what? The supply holds. Okay? Which is what should be happening in these moves to the downside. Supply structure should be holding. Okay? So, knowing that supply structure should be holding, we don't have this trend line to the downside. That is not there. So do we have, look at that, this trend line to the downside? Okay, let me clear this up and make this stronger. Do we have that? Yes or no, guys? What do you think? Let me just get up and stretch my legs. My lord. Oh, yay. Do we have that trend line to the downside? Oh, gosh. Oof. Oof. No, we don't. That's right, we don't. So, do we have a descending structure that is breaking? No, we don't. Why? Because you can't have an invalid trend line break and then say that. Let me see. Oh, that was coming from the other one. Yeah. Okay. Well, you get the point that I'm making, right? Because of this here being considered emotional and this making new lows, we wouldn't have a trend line here. Okay. So here, basing, rally, basing. Do we have this trend line coming? Oops. Erase all this garbage. Trend line. Do we have this one? Yep. Yeah, we do. That's legit. I would agree with that. Basing here, rally nice. Basing, yeah. Oh, yeah. Really good. That's legitimate. And we have supply here, not the proper looking supply that we would look for, but it created new lows, right? So would the removal of this supply be signaling something? Yeah, to me it would, since we know what we should be expecting from certain structures. Okay, so basically what we are getting at here is that right here, oop, let's see if no, that's not the one that I'm looking for. Let's do this. Short signal. Exit here. That's a stop. Well, yeah, you could have a stop above that, or be waiting for proper price action to confirm. Exit signal, exit signal. There you go. Chart exit signal. There we go. Okay. So that's what you would have. It probably would be higher because you'd be watching this candle as it's protruding through the opposing side of that supply to confirm that it's not like an emotional play through and then, holding like what happened originally here. Okay. You wouldn't want to just put your stop loss there because you would have been triggered out. So yeah, so this is the move that you would capture here. All right. This was the legitimate trend line, this lower one. Okay. Then it enters. So we had a downtrend here. Big move. We don't get structure until drop base, rally base, drop. Okay. Downtrend. Okay. Now we're entering into a downtrend. Not based on this big drop because we know about the big drops, right? We need it to peak. And then we need another peak. We need it to peak. And then we need another peak. Okay. Close below. Structure looks good. Okay. Downtrend. Okay. Now we're watching for continued moves to the downside. So supply here. No, yeah, by creating a push to all-time lows. So this would be a nice structure too. If there was, well, there was supply here with this one here. Yeah, this could have been a good one, except for the fact that this was improperly formed, this basing here. Okay. And then we have the rest of this. So you see what's going on here. This is higher time frame shenanigans. Okay. But you would have been signaled to exit and then wait for a clear chart. So this would have been entering into consolidation. Okay, removes the opposing. Now it's in ranging. Oops, where are you? There you are. Ranging, so now until it creates a proper trend to the downside, it just stays in ranging. So drop, base, rally, base, drop, close below. Supply, trend line. Yeah, and then that's the other chart, okay? There we go. Look at that. Whew, what an adventure, eh? Indiana Jones and the Temple of Doom. What an adventure we went on. That's like, whew, it's like a movie. We started at 9 o'clock, it's 10:20. It's an hour and 20-minute movie, isn't it? That story, that adventure, twists and turns, and is it going to go? We don't know. What is it telling you? Reverses up, trend lines, break, coming into supply, boom. Then they drop price. Monthly momentum candles to the downside. Where do the trends really come into play? I mean, it's just an adventure. Yeah, it was pretty good. Yeah, you found that key area. Yeah, we talked about this trend line. This would have been the one right here to watch for. And not this one. You found it too. Very good. Yep. Very good. You too, Pat. Good job. All right, Thulani, nice. You see, he didn't start the trend line here. Yeah, good. Looks good. Thulani, good work, my man. Good work. You make us proud. You will make a nice young warrior heading out into the jungles of the market. Defending yourself and feeding your family. Beautiful. Momentum shift. What happened, Mike? What happened here? This is not like you. Michael Dunn? What happened here, buddy? This is not the Michael Dunn that I know. Where are you? Oops. Oops. Oopsie daisy. Oopsie daisy. Yeah, I wouldn't put supply here. Oh boy, here we go. I wouldn't put supply there. Okay, you see, it doesn't look right. You see, then the zones that end up being created, not right. Lower time frame, yes. Lower time frame, yeah. On the 2-hour chart or 4-hour chart, yes, there's zones and stuff here, and it would look beautiful and make sense and all that stuff. Yeah, pretty good, man. Pretty good. Looks good. All right. Wow, what a journey. Let me screenshot that. Okay, ladies and gents, I think that was a great session. We covered a lot. If you completed 2 full classes, level 2, and you've done your homework, or you didn't have to do homework for every single class. Bottom line is, if you get the concepts, get the principles, and you think you're ready for level 3, do me a favor, send me an email next year. Okay? Not between now and Christmas, because I've got a lot going on with gatherings and family time and stuff, and your email will be lost. It will be lost, okay? Because it'll come and go and it'll be history. So just wait until in the new year. Spend your time with your families reviewing these classroom sessions. And then in the new year, send me an email requesting a graduation to level 3 and for me to review your work, and then we'll take it from there. And I look forward to having some of you in the level 3 session, all right, where you'll take your studies that much deeper and begin a new journey for 2023. All right, ladies and gents, so that's it. Enjoy the rest of your day, and I will talk to you guys soon. Take care.